In a world where stock prices fluctuate unpredictably, Tesla stock has captured the attention of thousands of investors. Experts from all over the world took the plunge and made a daring move, buying Tesla shares near the bottom at around $130 per share and shared their enthusiasm with the world. However, now these same experts are bringing a warning that could send shockwaves throughout the Tesla community. The stakes are high, and the future of Tesla stock is far from certain. Today, we're diving into the heart of the predictions, discussing the critical factors influencing Tesla's future, including the impact of rising interest rates and the much-anticipated Cybertruck, which could either propel the company to new heights or cause it to stumble. This could be the moment investors have been waiting for, but it might also turn out to be a turbulent ride. Tesla's short-term outlook is causing concern among experts who are warning of potential price declines, with some suggesting that the stock might fall as low as $200 or even $175. For those looking at Tesla's immediate future, is a far cry from the optimistic predictions many made earlier. Some have even speculated that the stock could potentially flirt with the dreaded $100 mark. However, while this short-term outlook may seem gloomy, there is an opportunity hidden within the turbulence. Experts believe that this rough patch could be a unique chance for savvy investors to scoop up Tesla shares at a discounted price. The possibility of the stock falling into the $100 to $200 range could open doors for those ready to make a move. If you've been waiting for an entry point, this might be the moment you've been looking for. Of course, this isn't the first time Tesla bears have made bold predictions about the company's downfall. Take Chicken Genius, for instance, who boldly predicted that Tesla's stock would fall to $140. When it did, he claimed victory, but then he raised the stakes, forecasting that the price would plummet even further, possibly to $60 or $80. While that price point has yet to materialize, the mere fact that it was predicted shows how volatile and unpredictable Tesla stock can be. It's a reminder that even the most confident predictions can be off the mark, and the stock market has a way of surprising even the most seasoned investors. As we look deeper into the current state of Tesla's stock, the biggest cause for concern is the company's delivery timeline. Initially, Tesla's models in the US were expected to be delivered between July and August, but now the timeline has been pushed back to August or September. This change in delivery schedules indicates that there may be a slowdown in production, and the backlog of orders is becoming an issue for the company. This slowdown, while not catastrophic, is still a sign that things are not running as smoothly as expected. One of the major factors driving this uncertainty is the current state of interest rates. Rising interest rates are having a significant impact on Tesla and its potential customers. With interest rates climbing, securing car loans has become much more challenging for many buyers. This is a major obstacle for Tesla, which relies on sales to middle-class buyers who are now finding it harder to get approved for loans to purchase their vehicles. This could hurt Tesla's ability to sell the number of cars they had originally projected, especially as they look to expand their market share. Many of those who were previously interested in purchasing a Tesla model might now find themselves unable to secure financing. As a result, the demand for Tesla's vehicles could drop, which might slow growth and impact the stock price. Consider the scenario from just a little over a year ago. Enthusiastic investors were eyeing the Model X, but as interest rates began to climb, excitement turned into hesitation. Investors found themselves in a tough spot, faced with the decision of whether to purchase a new Model X or to double down on their Tesla stock investments. For many, the choice became clear. Instead of buying a new car, they chose to invest more in Tesla shares, hoping for a long-term return on their investment. This kind of decision-making is a prime example of how investors navigate the uncertainty of the market. As interest rates continue to rise, decisions like these will become more prevalent, and they could have a significant impact on Tesla's stock price in the short term. But just when you think things are getting bleak, there's another twist in the story. Tesla's upcoming Model 11 has investors buzzing. The vehicle's release is highly anticipated, but there's a problem. Financing it would require facing those high interest rates that have already caused trouble for so many. The question then becomes, Should investors take on that financial burden and buy the Model 11, or should they stick to investing in Tesla stock while the prices are still relatively low? For many investors, this is a tough choice. On one hand, they're tempted by the latest model and the excitement of driving the newest Tesla innovation. On the other hand, they know that investing in more shares could provide better long-term returns. As they weigh the options, these investors are well aware that the next few quarters may not be all rosy for Tesla, and there will likely be fluctuations in the stock price. The temptation to buy more shares at a lower price is strong, but many are determined to avoid timing the market and focus on long-term gains. This strategy is all about weathering the storm and holding on to Tesla stock for the future, even if the short-term outlook is rocky. Amidst all this uncertainty, there's one more factor that could play a major role in Tesla's future: the Cybertruck. This much-anticipated addition to Tesla's lineup is generating a lot of excitement, and for good reason. Despite some of the short-term challenges, the Cybertruck could prove to be a game-changer for the company. However, experts are cautious. Initial sales may not be as profitable as anticipated, but as production ramps up and the vehicle gains traction, the Cybertruck is expected to make a significant impact on Tesla's revenue, especially in 2024. The true financial benefits of the Cybertruck might not be immediately clear, but investors are optimistic that it could drive up Tesla's stock in the long term. Still, some skeptics remain. Despite over 2 million reservations for the Cybertruck, Wall Street isn't entirely sold on its success just yet. There are concerns about the vehicle's price point, and some wonder if reservation holders will back out. If the Cybertruck lives up to the hype, however, Wall Street could quickly change its tune. Investors will be watching closely to see if the Cybertruck can live up to its billing, and if it does, it could be the catalyst that drives Tesla stock to new heights. As it stands, Tesla is trading at a forward P/E ratio of around 54, roughly 3 times higher than the average for the broader market. While this may seem like a lofty valuation, Tesla's growth prospects are nothing short of impressive. Experts predict that Tesla could grow by 5x or more, outpacing average stock revenue and earnings growth rates. However, this high valuation means that Tesla stock could face significant volatility in the short term. Some experts are predicting that Tesla could drop by as much as 50% during a tough recession, which could cause concern among investors. Despite this short-term uncertainty, many remain bullish on Tesla's long-term potential. They believe that once the market settles, Tesla will be in a strong position to capitalize on its growth trajectory, and the stock will rebound. But for now, it's a waiting game, and only time will tell how the story unfolds. So what does the future hold for Tesla? Will the Cybertruck revolutionize the automotive industry and change Wall Street's perception of Tesla, or will it face challenges that prevent it from meeting expectations? Only time will tell. Investors will need to stay alert, but those who remain committed to Tesla's long-term potential might find themselves rewarded in the end. What do you think about Tesla's upcoming Cybertruck and its potential impact on the stock? Are you bullish on Tesla's growth prospects, or do you have reservations about the company's future? We'd love to hear your thoughts in the comments below. If you enjoyed this video, make sure to hit the like button and subscribe to stay updated on all things Tesla. Thank you for watching, and we look forward to seeing you in the next video as we continue exploring the exciting world of Tesla.